Let me start this episode with a confession. I've been in the capital raising game for a minute now, and I've raised millions, built a fund, launched platforms, and helped others to do the same. But when I first heard how Shomail raises capital without using a single drop of debt by design, not by limitation, it flipped a switch to me. It wasn't just impressive, it was principled, right? Because this man didn't just build a business, he built a standard. And that's what this episode is all about. The episode is for anyone out there who's ever thought, I don't know enough rich people to raise capital. I'm not from the finance world. I didn't go to Harvard or grow up around wealth. How do I raise money without compromising my faith, my values, or my community? That's the tension Shomail stepped into, and it turned into his superpower. Here's what makes this episode different. Shomail is a Pakistani-American entrepreneur. He was born in Karachi and raised in New Jersey. His dad worked 3 jobs to give their family a chance in America. And like many first-generation kids, he was expected to become a doctor or a lawyer or something like that, and that was the blueprint. But instead of following the safe route, he did something most people won't. He told his father no and chose entrepreneurship. He started out in the MLMs, failed fast, learned how to sell, how to speak, how to hustle, and ultimately found his way into real estate. And fast forward to today, he's flipped over 700 deals, raised $75 million, and built multiple businesses, including Apex Capital Group, which is an awesome fund, a title company, an education company, and a fund that operates completely interest-free. Let that sink in. No hard money loans, no bank debt, no interest, just joint venture structures, equity sharing, and deep respect for the Islamic principles that shaped his model. Principles that say profit is fine, but asuri is oppression. Everyone shares risk. No one profits from someone else's pain. Now, if you're not Muslim, don't tune out, because what Shomail teaches in this episode isn't about religion. It's about ethics, conviction, and creative structuring. We talk about it. How he built trust with investors who can't touch interest-based products, why not taking on debt has made his capital easier to raise and more sticky, his process for turning no leverage into marketing advantage, and why he believes faith-first framework don't limit your scale, they enhance it. We also get real about mistakes. At one point, he walked away from $20 million in equity because of how he structured deals early on. That mistake shaped the way he structures everything now. And then there's his LinkedIn game. This man turns cold connections into capital conversations like a pro. You'll hear the full system he uses to raise capital on LinkedIn with no ads, no paid funnels, no fluff. And if you've ever wanted to raise capital the right way, the values aligned way, this episode will hit you hard. And personally, as someone who's trying to bridge the gap between culture and capital, this conversation helped me to see just how powerful conviction can be. It reminded me that the best capital raisers aren't just good at math, they're clear on their mission. So let's dive in. This is Funds on Fire. I'm Devin Robinson, and today's guest is the debt-free, faith-driven capital raising strategist, Shomail Malik. Let's go. Welcome to Funds on Fire, the podcast that ignites the passion of investment funds and capital raising. Here we turn the complexities of fund management into clear, actionable steps that drive results. I've invested into diverse real estate across the United States and managed thriving funds, and I'm committed to transforming lives through the vehicle of investment funds and helping others to do the same. Join me as we document the journey of scaling businesses, raising capital, and impacting tens of thousands of people around the world. My name is Devin Robinson, and welcome to Funds on Fire. What's up and welcome back today. I'm excited because we have, honestly, I love this guy. Shomail and I, we're in the same mastermind, Collective Genius together. And so we've seen each other a good bit, but we always have a really good time on the basketball court. That's one thing that I love about Shomail. Him and I will go back and forth, talk junk to each other, have a really good time. And so we share that. But one of the things that I really, really love about Shomail is, one, he's got a really strong conviction on what he believes, who he is, and what he's grounded in. And I think now more than ever, that is more important in this age and society that we live in the way that we run our businesses, in the way that we lead our families. I'm just constantly encouraged by the things that I see on social media, by the interactions that I have with him, and the way that I see him give and serve at a really high level, while at the same time operating his business and his funds at a massive level. And so I'm glad and thankful for you as a friend, and then also thankful and glad to have you on the podcast today, man. And so I would love if you could, just for a minute, give everybody like a little bit of a little rundown of who you are, what you do, and where you're from, man.
Yeah, absolutely. Shomail Malik. I'm in the New Jersey market. First of all, thanks for having me on, Devin. It's an honor and it's a pleasure
All mine.
to share with your audience anything that I could hopefully impart and benefit them, even if it's one nugget to help them change their trajectory a little bit. I think it'll be worth your time listening to this. Who am I? So, my our family came here to the United States. I'm not born here. I was born in Pakistan. We came here in 1987, so I was 5 years old at the time, and it was always drilled into my brother and my head was just two of us that the standard you're going to be a doctor. I mean that's kind of if you're Pakistani, Indian, you're either a doctor, engineer, or a failure. That was your three options, and so that was it for me. So I went into Rutgers University as a neuroscience major, and I had economics as like a backup. So I took a double major at Rutgers, and then I bought my MCAT book. I was gonna go to med school, and I'm thinking to myself, all right, so it's gonna be this. I graduate, 4 years of med school, 3 years of residency, killing myself. Then I got to pay off probably medical school debt. And then I finally get my life started in like my mid 30s. And I'm like, nah, man, this is not what I want to do. And I had to have this really tough conversation with my father, who, basically is putting all his eggs in these two baskets, myself and my brother, that you guys are going to make generational change for us by becoming physicians or whatever. And that's it. And that's why we're here. We're in the land of the golden opportunity in America, and that's why I brought you guys here. And we left everything behind. We literally came. People tell these stories, but we literally came with 4 suitcases and a couple $100. And
Well,
I saw him work 3 jobs. We would only see him on Sundays. So he was the brown guy behind the cash register at the local convenience store. He was also a scientist. To his background, he's a mechanical engineer, but he couldn't find a job as an engineer. So he started working in the pharmaceutical industry as a scientist, and that's where he built his career. And we'd see him on Sundays. So I learned work ethic at a very early age. I learned struggle. I learned that we didn't have that much money. And I also learned that I didn't want to be in that position. And so um, getting out of school, starting earning, and starting setting up my life at an early age was very important to me. And so I had this very difficult conversation. I thought my funeral was going to be the next day. I thought he was gonna kill me. But I had gotten the business bug in college, read Rich Dad Poor Dad back then. I got involved in multi-level marketing, and it was like an eye opener for me. I didn't even know what this world of business was. And multi-level marketing is its own thing.
oh, wow.
And
There's no doubt.
so there
Amway?
yeah, I got into Amway later, but this company was an internet company. So remember back in the day when you had AOL,
Oh, yeah.
dial
You've got mail.
messenger, dun, dun, dun,
Yeah.
dial there.
I love.
So yeah, and then you've got mail. Yeah, so they were competing against them or trying to. A company called 2x2.net doesn't exist anymore, but
Flip.
they wanted to get that into small to mid-sized businesses, but they wanted to do it through distribution from independent contractors, and then you can build a downline and then earn. So I'm learning about this while I'm in college as an undergrad, taking some mind-numbing courses on neuroscience, like extremely difficult stuff. And I started skipping my classes to build my downline. I'm having these meetings, and I get to the point where I started making more money than my father as a
Oh,
chemist. And I'm like, yeah, I'm gonna retire you guys, and I'm gonna retire myself in my early 20s and all this stuff. And the guys around us were driving like Acura NSXs, Porsches, and stuff, like the leaders in this. We took a team as college students out to San Jose to their big corporate event that they held. And at that time, they were releasing some kind of um, robotic AI voice over type of a thing, and it looked super futuristic.
yeah.
And myself and like me and my friends and stuff, we're looking at each other like, "Holy crap, we're gonna be rich!" And, and we didn't even know what we were in. Uh, anyway, 3 months into it, that whole thing came crashing down. There was no real product behind it.
Mm.
You needed a real product, like
Yeah.
companies like Amway that are regulated by the Federal Trade Commission. Those are real companies. They sell real products. I did get into that later on because what happened is I'm coming out of college and I don't know what I want to do with my life at this point because med school, I've kind of put that away and I've switched that part off in my life. And a friend of mine, graduated valedictorian from the pharmacy school, said, "You know what? Why don't you try pharmaceutical sales? Sell drugs, but these are FDA approved,
Yeah, legal drug.
right? Legal drugs." And I was like, all right, let me look into it. He got me some interviews. And bro, like my driving record was absolute garbage in college. Like I used to speed through the campuses and stuff. So I had 8 points on my record. New Jersey,
Jeez.
all points, you're done. So I'd kill the interviews, get the job. They do a background check, and they're like, this young kid had 21-year-old. This guy
Can't even drive.
on his record. And they give you a company car. So they give you a company car, they give you a phone, they pay for the Wi-Fi in your house. Like you have no expenses, you're single, and everything that you make, you're like banking it
Yeah.
essentially. So you could, start doing that. And then a doctor in one of the offices approached me and she's like, "Oh, I have this business opportunity and my husband and I are expanding." And I'm like, sounds familiar. I've done that pitch before.
Yeah, yeah.
And then I'm in a living room before you know it, and circles are being drawn. I feel like, oh, not
They
this
got
again.
you.
Not this again. But I was like, I really need this doctor to write more of my medicine. So I was like, here, take my money, I'll join. And the intention was never to show up at a meeting. And then the husband starts calling me. He's like, "Hey, we're having this meeting on Wednesday. You need to be there." And I'm like, "All right, bro."
Yes.
And then that's how I kind of got like snared into it. But hindsight's always 2020. You always look back. That's where I learned public speaking.
Yeah, I'd imagine.
That's
I was gonna ask.
every data point of your life, every milestone in your timeline, um, is there for a reason. And so, there's a lot of benefits to MLM and multi-level marketing. You learn a lot. Speaking to strangers at a Barnes and Noble, that's not a real. First of all, it's not a normal thing to do. Like, just and then all of a sudden inviting them into a business opportunity. Um, and so what I was doing was while I was working, I always had this thing in my mind that I'm going to have a side hustle. And initially it looked like this. Prior to this, it was going to be real estate. I got introduced to real estate in college through a downline from that previous company.
Mm.
And his father had bought the franchising rights for Keller Williams in New Jersey. So he had opened the first office. I would drive an hour, skip my classes at Rutgers, drive an hour, learn about cold calling, prospecting. I'm banging the phones and trying to get listings and stuff. So I got a taste of real estate. But then I went down back into the MLM world, and I was there for about 3 years. Then when I got married, my wife was like, they're trying to pull you along as a couple. And
Oh,
I'm
gosh.
like, this is too weird, and it
Yeah.
feels like a cult, and I don't want to do this. And I was like,
Yeah, don't blame her.
and then so then I transitioned out of that, and it was my brother had just done a flip. He was 22 or 23 and made like $140,000 on it.
Ah,
Um,
huge money.
and like he went to deposit that check at our local TD bank over here. And they're like getting the manager and stuff. They thought something illegal was going on because he's this young kid trying to deposit this six-figure check.
Yeah.
And he walked me through that whole process. There's a guy that he went to school with, and he had these "We Buy Houses" signs up and down Route 27 over here.
Mhm.
Is that, "What is this about? How does it work?" And there was no fortune builders or any of you had Ron LeGrand and, Carlton Sheets at that time. This was like 2007, 2008. But he kind of like stumbled his way into doing a couple of flips.
Yeah.
And then he basically shared the game with me. And I'm like, all right, this is perfect. I've got my corporate gig and I'm doing really well there. And I started getting promoted really fast to management and so on and so forth. And I was loving that corporate Kool-Aid juice. Like I kind of, because I didn't have to report to an office, that would have destroyed me. Like I can't live with myself if I have to go into a cubicle. And I had done internships and co-ops during my time in college. That I knew wasn't for me. This was field-based sales. I have a home office, and once a month I see my manager, and my manager lives out of state. So I'm like, oh, this is phenomenal. Um, and um, and so just fast forward. '08, Lehman Brothers crashed.
Yep.
That was the first big domino. And I would say that him and I, my brother and I, are probably benefactors of that situation that was created because of so many foreclosures. As a matter of fact, New Jersey and Florida used to lead the race. There were like two racehorses back and
Wow.
forth. Who's going to be number one in foreclosures? And so what we used to do is to get these properties, negotiate a short sale with the lender, and then buy the property and then pretty much flip it the same day to an end buyer. And that was wholesaling.
Yeah.
So we closed on title. We wouldn't do any of that stuff with like, getting the buyer's funds or anything like that. We had capital. I had money from my W-2. So we closed on the property and sell it. Now, fast forward to 2010, 11-ish, where banks started bringing in regulation that, no, you can't sell the property. There were deed restrictions and so on. And so we're like, all right, well, if our capital is going to be tied up, let's just, refurb the kitchen a little bit. Let's redo the bathrooms. And that's how we started getting into the flipping thing. Mind you, this whole time, him and I have separate companies. So, you start getting a little bit of sibling rivalry going on.
Mm.
It's a little bit weird and tense at the dinner table when we'd get together because everybody wants to pound their own chest. He's younger, I'm older. And then we were also starting to tap into investors because now our capital is getting tied up and we're like, all right, this is a limiting constraint. Like I have a
Mhm.
finite amount of capital. And so now I got to bring my dad in or his brother in and say, all right, we're going to hold this property for about 3 months, 40 days, or 4 months. Wells Fargo started coming out with the 120. Other banks had 90 days of hold. And then we would just flip it right, on day 121, basically, or day 91. And that's what got started in late 2012 with the whole raising capital
Yeah. Nice.
aspect of it.
And then
Prior to
and then you ended up partnering with your brother, right?
Yeah, in 2016. So
Cool.
for about 6, 7 years, we did it separately on our own. And what we did was New Jersey's 21 counties. We just chopped it up like a pizza pie. And we're like, all right, you do your marketing here. I'll do my marketing here. We'll never step on each other's toes. We'll never have to compete. And this is before buying data, skip tracing, and then calling. This is before that time. So this is direct mail, bandit signs, and door hangers, like
Nice.
door knocking. That it's wholesaling 1.0,
Yeah.
right? And so we made a ton of money at that time. Bought up a bunch of rentals. 2014, I was able to leave my corporate gig. That was an
Wow.
interesting story in its own. And yeah, so that was, and then we evolved into doing turnkey rental properties. So it basically became a lot of capital raising. I intentionally changed my office into, there's a high rise over here that overlooks New York City, even though New York City is 45 minutes away. And so we got onto the 19th floor. It had this like hedge fund feel, like a boiler room type of feel.
Yeah.
Hired up sales guys and said, you guys are going to sell these turnkey rental properties to high net worth individuals. And that's how it kind of started because I had done the pharmaceutical sales thing. I knew how to run a sales team. Um, and, uh, and so, yeah, we did that for several years and we saw this, I guess you could call it fragmentation in the market where high net worth individuals would sit down at a coffee shop with a realtor and say, hey, I've got $500,000 to invest. Can you find me some properties? And then they'd find them some distressed properties that would have some equity. And then inevitably, Dr. So-and-so has to go find a contractor, and they,
Mhm.
that contractor might take them for a ride or whatever. Now you got to go back to your original realtor and say, hey, okay, we're done with I finally got the CO. Can you get me a leasing agent in your office? Now you got to lease it. And now you're dealing with the tenants and all that. We're like, all right, let's take this whole process and vertically integrate it. And we'll do everything. We'll source the deal. We'll sell it to them. We'll collect our fee, right? Our wholesaling fee. And then we'll let them know that, look, year one, your ROI is not going to be there because the first 4, 5, 6 months, we have to take it through renovations and leasing. But this property is going to serve you year 2, 3, 4, and onwards, and you keep all the equity. We make our money up front, and then we'll manage it for you on the back end, 7% property management fee. So we're making money on a wholesale fee, and then we're
Mhm.
making money on the back end with the property management fee. And so if you want to call this, I guess, capital raising, this was like that capital raising that was happening now.
Nice.
Because prior to this, we would just have friends and family participate in rehab fix and flips, and we would do like a 70-30 split equity sharing type of model. Never borrowed money from a hard money lender because of some prohibitions in my faith of taking and paying interest. So we never dealt with interest. It was always equity based type of structure. And then now we were like, all right, investors started asking us, these rehab fix and flips are interesting, but we get paid after 6 months. If a project gets delayed after 8 months, do you have something where I can make money on a monthly basis? And I noticed that a lot of older investors were asking that.
Mhm.
They wanted something steady coming in. I said, well, look, this is what I do with my money. I don't really know stocks that well. I don't know crypto that well, even though I learned that stuff later. But I put my money in real estate. And that's how I left my corporate gig, because I bought enough rental properties where I had enough passive income coming in where it exceeded my living expenses. And they're like, yeah, set us up with that. And that's how I got started. So
Nice.
what I used to do was I took the apartment model, the multifamily apartment model, where the sponsor essentially collects a acquisition fee, then they participate in the cash flow,
Yep.
and then on the back end, they participate in the CEO appreciation from the equity buildup over time. And so I was like, I could do that with single family houses. And I heard David Lindahl speak at the same event that I was speaking at, and I was already doing this. And then when he said that's what they do in multifamily, because I didn't know that world that well, I was like, oh, that's validation.
Yeah.
And I was just doing this with single family. So I would just find investors. I'll say, I'm going to sell this property to you. I'm going to make a fee up front. And then I'm going to get 10% of the rent. And I'm going to manage it for you. So I'm going to get a 7% property management fee. And as long as I could sell that cap rate, I could sell that NOI, I had a customer.
Mhm.
And so we started beefing that up. We built a property management company. We were managing this stuff in-house, 250 or so units in New Jersey, about 115 in Toledo, Ohio.
Mm.
We ended up selling and exiting that company to a larger company. And so we had a successful exit with that. And we still get paid on that today, as a matter of fact. So there's like
Nice.
a residual component to that deal.
Fantastic.
And that was, and so we exited that. COVID happens, and I'll bring you to the present now. That's where, starting to look at Maxwell and others about this wholesaling 2.0, virtual wholesaling. So that's what we did. We bought data from PropStream. We started learning that side of it, dispo acquisitions and all of that. And so we had to reteach ourselves
Mm.
the wholesaling side of the business. After saying that, look, property management, I've got too much PTSD from that. And
Yeah.
let's get back into that cash flow machine. And so as dad started to do well, we said, all right, let's raise money in a different way. Because here's what happened. There's a town here called Willingboro, New Jersey. Will Holly, who's in Collective Genius,
Yeah.
our colleague, he wholesaled the property to me down there. And I'm like, yo, what is this town? And kid you not, Devin, this town has 6 different houses as models. And the builder built 11,400 homes that look like these 6 houses. So
Whoa.
6 models. So 2 types of capes, 2 types of ranches, and 2 types of colonials. And they copied and pasted that, not in a development,
In the whole city.
entire city.
That's crazy.
Entire city. So in a matter of like 2-3 years, we did like 125 flips there. Problem was this.
I want to take a quick second to talk to you guys about something that could completely change the game for you if you're serious about launching and scaling an investment fund. If you've ever wanted to start a real estate fund, private equity fund, or syndication but didn't know where to start, this is for you. Fund Founders is giving you free access to Foundations 101, a step-by-step course designed to help you to structure your fund the right way so you stay SEC compliant, raise capital like a pro even if you don't have a network yet, scale your fund without constantly chasing investors, and avoid costly legal mistakes that could shut you down. This is the exact roadmap successful fund managers use to launch, manage, and raise capital for their funds without wasting time or money. And the best part, it's completely free. Go to fundsonfire.com/founders or click the links in the notes to get instant access to the Fund Foundations 101 course. Don't miss this if you're serious about raising capital and growing your fund. This is where you start. Again, that's fundsonfire.com/founders, or click the link in the notes. Now let's get back to the show.
We sold those properties for that same structure that I'm talking about. Had the deal structure been a little bit different, and this is where capital raising comes into this conversation. If I said, hey, why don't you come in as a lender? And actually, before I say this, let me say this. The people that own those properties today, they were all in for about 120K. All of those properties are worth 300,000 or more today, obviously, because you had that COVID boost and all of that. Obviously, no one could have predicted that black swan event, but even then, you knew there was going to be value appreciation in that town, and so we left about $20 million on the table.
Sheesh.
Kicking myself. That's how much equity is in those properties that we sold. And now when I hear, investors that have a sizable portfolio and they say, I wish I could go back in time and hold anything. And kept everything. And of course, there's some properties that are like just made for a fix and flip, and you're not going to keep it because the numbers don't work. But the thought is still, somewhat true. Like, you would have kept the majority of them because you would have been sitting on generational wealth. So we started to do that. We said, let's deal structure it differently, where we can keep the equity, bring them in as a lender. We'll be a borrower. We'll set this up. They'll get paid from the rental income, a certain percentage that's tethered to like 6 or 7%. And that's what a lot of our retiree type of investors care about, like an ongoing thing and capital preservation.
Stable.
Right. Yep. And along with their Social Security income that's coming in and so on. And so they can just ride it out in their golden years. And so we started building up the portfolio this way. And like, had we done it with those other 230 properties before, but that's fine. It happened. We learned from it, and now we're redoing it. And so that then evolved into like, all right, now let's put this thing on steroids and come out with a fund and go after accredited investors and so on.
Nice. Okay. Whew. All right. My man took us from beginning to end, which is great. So we've got where we are now. And one thing that I love, and this is what I love because I think about this all the time. People don't know a couple things that people don't know about me. One, I was I worked I did fundraising. So I guess in education, or no, sorry, elementary school. There it is. Sorry. I don't know why I was blanking on that. Elementary school fundraiser. So I would go to each class, every single from K through 5th grade when I was out of college, and give character lessons. I don't know, what is that? 80 character lessons a day, 5 days a week, and to elementary school kids. And so at the time, for them to go home and raise money for their fun run for their school. And so essentially, if I could keep the attention of a kindergartner or a 2nd grader, I had learned how to do that at the time. And that plays into my life now, which I wouldn't have seen that back then. And very similar to you. You went through the MLM. So, you went through from Rutgers to rehabs, right? You went from the MLM side. You're in Rutgers. You had this huge boom where you learned what was possible in your 20s, which is crazy to even think about, just like the effect that has on a 20-year-old, and then moved into a place in which, because of the capital that even just the structure that you started doing things with in the beginning, sets you on a pace now, which even allows you, and as you and I have talked before in the past, to be able to structure the way that you offer what you do very uniquely, partially because of your faith. And you and I talk about that a lot because we both are very, very convictional on our faith and what we believe in and how we live that out. And I'm extremely encouraged by that with you, especially in this way, because like the one thing that I know is you don't, right? You don't take on debt, which means you probably own a lot of the properties free and clear. And then you also, when you raise from investors, you're raising without a debt model. And I think that's super unique. And so I'd love to even just talk about that a little bit, because I think, one, there's a lot of people that are probably afraid to do this because they don't know how. And so I don't know if this is all proprietary or anything like that, but for real, because what I know, I think you said you've raised about $75 million. And so for Muslims, like for Muslim investors who avoid riba, is that what it's called? Riba?
Yeah, interest. Yep.
Riba. How do you educate them on halal real estate models, and how do you earn their trust?
Yeah, for sure. I mean, I'll show you like some of our like marketing pieces and things like that. It's
Yeah.
clearly targeting a certain demographic,
Yeah.
Muslim families. So Muslim Americans happen to be in one study the second most affluent demographic in the United States,
Yeah.
and in another study the third most. Very educated, good stewards of their wealth, not very wasteful, or very consumer minded and so on, if you want to say that. Um, and so what I've noticed in the community is that they want to compartmentalize their wealth that they've earned. They won't put it in savings accounts because savings accounts earn interest.
Just yeah.
Stay clear of that. They'll put all this money in checking account,
Wow.
and we do all of this education as far as, look, you are shrinking your purchasing power because of inflation. So why are you putting your money should be in there should be some velocity to the money. The money should be moving and it should be invested in something. And you should treat your money as if it's your employee, that it's going out there earning you more. Right now, there are vehicles that exist, and there's tons in Malaysia and in the Middle East, but they're far ahead in terms of the discipline of Islamic finance. But the main premise behind Islamic finance is, number one, not to put your money into things that are highly speculative, not to put your money into industries that are prohibited, such as the pornographic industry, smoking, guns, things like that. And so, like, I can't buy Marlboro stock, for example, right?
Yeah.
And risk sharing. So there's a level of inherent level of risk sharing. So in our holy book, the Quran, there's a very clear ayah in this a verse in the second chapter that says that they will say, and this is how I want to break it down. They will say that interest and profit look the same, but in fact, they are not the same. God has made profit and doing business permissible upon you, and taking interest prohibited, right?
Mm.
And so, what's the reason behind that? People ask, "Oh, well, why is that?" Well, when a lender gives money to a borrower, the only thing that has to happen is passage of time, and they can collect on it, right? If that borrower is not able to make payments, then they're in a very oppressed position where the lender can now come after them, seize their assets and things like that, which creates, classifications in society, which creates disparity in income, which we're seeing today. And we're seeing that as a major problem between white collar, blue collar, and so on and so forth. Sure, you've seen that in medieval times, but it exists today as well. And in Islam, if a lender gives money to a borrower, if there are moments where they're not able to pay back, that you have to express clemency and mercy to be able to pay back. And it's given as, and if they can't pay back at all, then you consider it charity, and you say that my reward is with God,
Yeah.
right? And so with equity sharing, those, I guess you could say, boxes are checked in that both parties are taking on risk, whether it's gain or loss. Um, their speculation is removed because you are relying on the operator to have done due diligence. So we don't buy things sight unseen. Right, and I had asked scholars about this as well, like, "Hey, look, I can pull the trigger on this house sight unseen." Is like, "No, it's better for you if you are going to invest other people's life savings, then it is a covenant and a trust upon you to go and see that property with your own eyes, or at least your team, to make sure that you are doing right by them, like true
Yeah.
fiduciary responsibility."
Yeah.
Right? And that's how it manifests in the business world. Um, and and so we said, all right, well, we want to abide by this. And where we thought that this was going to niche us so much that's going to be so hard to raise capital, it ended up being our superpower.
Well, and that's what I was gonna ask. Like, do you feel like the no debt model limits your scale, or does it attract higher capital, quality capital
Not at
over
all.
time?
It limits my scale as so much as when people tell you that, "Hey, Devin, why don't you invest in Houston? It's a great market." And you're like, "Well, I got enough right here in my backyard." It's the same
Yeah.
with capital raising, right? Like, yeah, we have. non-Muslim investors as well. Yes, they like that model. They're like,
Yeah.
"I can make more money in this model as well too." Um, and they understand it. But at the same time, I've got enough to
Yeah.
not, there's about 2 million Muslim Americans. Some studies say up to 5 million, and the central hubs are Houston, Dallas, Southern California, tons of Silicon Valley money. There, a lot of Muslims in tech. Michigan, Chicago, and then of course New York, New Jersey, where you have all the Wall Streeters and stuff. So I've got enough in terms of a addressable market and target audience to go after.
Well, and that's awesome, man. I have a couple, and I have, okay. So I've got some questions, and I also have some personal questions. One, because like, and I don't know, I think we've talked about this, but I guess like 4 or 5 years ago, I actually found out that I was half Middle Eastern, like half Moroccan. My dad, I didn't know this, so I thought this guy was my dad all my life. And about 4 or 5 years ago, I took a 23andMe test, found out that there's this other guy that was my dad all my life, and he's Middle Eastern. And so I joke, I say that I'm the two worst things you can be in America, Black and Middle Eastern. And so, but it also brings like this really unique for me, almost like a different, almost a different vision for my life in the sense of like, okay, um, and you and I don't think we've ever talked about this, but there are, and I've talked on this podcast before, but there are $82 trillion worth of assets under management in the US currently.
Yeah.
That in private equity, real estate, hedge fund money, all of that in the US. 1.4% of that is managed by minorities, women, and immigrants. And so that means that nine out of that $82 trillion, 98.6% of that is just managed by white men. And so I think there's this massive disparity between access to capital and information, and minorities, women, and immigrants. And so one of the things that I've wanted to do is be like, okay, what does it look like for me in my life to even potentially try to bridge that gap between the opportunity that Middle Eastern people have, because like that's my heritage. Like I'm learning about it. I'm loving it. I'm learning Arabic. I'm doing all these things because I want to see if I can figure out how to bridge that gap between the access to information and capital, and then even like opportunity in how capital is raised in a almost like a no debt model similar to yours, and Middle Easterns, and even just like I even think like, have you considered an international feeder like fund type model where people you're gaining capital internationally, or what does that look like for you? Because now I'm just curious, because I'm like, I want to be able to raise capital and understand how to reach and engage with like a whole Middle Eastern demographic in America that doesn't have a model to invest in. Not that like they don't have the money, they don't have the right models to be able to invest in.
Sure. Yeah. So yeah, we have talked about that. And when we were doing the turnkey rental model, I actually sent 3 of our reps out to Dubai to attend a couple of it was the World Economic Forum.
Yep.
And one thing is that like anything else, it takes a lot of relationship building. And you're kind of playing the long game, but it's maybe a year later when you tap on that, you'll get funds coming over. You have a lot of expats that have gone to the Middle East because there are tax advantages,
Oh yeah.
income taxes. I mean, if you know Max Maxwell,
Mhm.
moved to Dubai.
He's out there.
Yeah, he's out there. A lot of it was because for tax reasons. And I've seen several high caliber real estate investors also move out there for similar reasons, and they're raising capital from expats. There's huge communities in Bahrain, Oman, Saudi Arabia, all of those places. People working in oil, people working in gas, people working in tech, tons of money, and they're banking a lot of it because
Yeah.
they're not paying too much taxes on it, but they do wanna mobilize it and put it into new United States is still considered a safe haven in many aspects, right? So if, you know, wars break out and everything's going to hell, like, United States is still considered, a safe place to invest,
Right.
right? And so people want assets there. So we have some investors that invest, from there. So,
Nice.
yeah, there's a specific classification though that you have to get. for it's slipping my mind right now, but in your PPM, you have to just outline that you're gonna raise international capital and pay that.
Yeah, that's an international
Yeah.
international feeder fund, right?
Yeah, it's something with
Or
an S.
master feeder model. That's what it's
That's the
called.
feeder model, but there's something with an S. I'll send it to you afterwards.
Okay,
Yeah.
cool.
Yeah.
So I guess, man, I want to talk with you more about that a little bit later. But I know one thing that I'm really, really excited to talk about, and you've been talking a lot about lately, is raising capital on LinkedIn. So you've got this really cool strategy that you've been using, and I guess as much as you want to talk about it, I would love to hear like what those models are that have worked for you, because it seems like as you've been able to engage with people, understand how to do that, you've been able to start up conversations and raise capital on LinkedIn. And so for me, I'm like, man, how do you do that? What kind of strategy are you using for that? And what does that look like?
Yeah, I want to give you a few specific anecdotes.
Cool.
So my very first deal was right here by where my kids were born, St. Peter's Hospital, and it was from a bandit sign. 150K purchase, 55 reno. We so it's all in for about 205. What closing cost 210, and we ended up flipping it in 2 months and 23 days for 330,
Wow.
right? And what I did at the time was I did a 80/20 in reverse. So 80% to me, 20% to my investors. It still ended up being a 56% annualized ROI,
And that,
right? Because we've got it done so fast. And
yep.
when you finish your projects well before time, that really makes the annualized ROI look good, right? Because of that multiplier. And what happened from that first one, and how do I get the money for that? So, I had a small email list at the time, and I said, "Look, I've been doing this for 4 years. Here's a couple of before and afters of projects that I did, and every time these transformations happened, I made a lot of money, and I was doing it with my own capital. Now what I'm doing is I'm seeing that I'm limited, and I'd like to bring in capital partners to participate. And so I just did a dinner at a local Pakistani restaurant over here, and then did a slide presentation of showing them properties, who I am, and if the next property that's available looks good, are you interested in investing? And, a couple people jumped into that. It was kind of like a friends and family round. Probably not the most, kosher way to do it, but friends and family nonetheless. I knew all of these people. They knew me. Um, well more than a substantive relationship has been built. And so we're doing just capital partners, and it's a joint venture between myself and you guys. And that then set the stage for them saying, "All right, well, I was just testing the waters. I was just dipping my toe, but I actually have like $400,000 I'd like to invest."
Mhm.
And then the next person said something similar. And then I've got a brother-in-law who's, killing it in private equity, and I think he would like to invest. And then it started to snowball from there where eh, raising the capital is fine, it's the execution, because then you don't have to market so much. You don't have
Yeah.
to be out there as much. Now, I will tell you this, when we had the turnkey rental property business, we were growing so fast. At one point, it looked like we were gonna implode,
Mm.
right? And there were some service quality issues and things like that. And, one investor knows another, and people start talking, and they're like, "Hey, well, like, it started off good, but things are going a little bit awry recently." And that bad word starts to spread pretty fast as
Mm.
well. And so people started to like take a step back as well. So I know what it is to start from scratch, but then also to how to rebuild that as well.
Yeah.
And so had we kept going in that trajectory, I would have probably raised over like a 500,000,000 today. But there was a reset that happened during our and that's why we wanted to exit that business. We said that, look, guys, our core competency is in property management. I know we sold these properties to you, and you're the beneficiary, benefactor of like the equity 3xing at this point. Congratulations, right? But I also know that there was a lot of rockiness to get to this point.
Yep.
Renovations took longer or whatever it was. Um, and some of the properties in Ohio, I think there was about 6 properties, they became absolute money pits.
Mm.
And we recognized that. We said, "We can't just keep fixing these properties. These are old infrastructure. Let's just sell them." They ended up selling in the red. And what we did is we came out of pocket to make those investors whole. And we said, look, at least you've got your principal back. I'm sorry you lost time and there was an opportunity cost, right?
Yep.
Obviously. But I wanted to make sure that at least you get your principal back so that if you and I meet, and this is from that conviction and faith,
Yep.
like if you and I meet on the day of judgment, I don't want there to be anything between us, right? And that's what's keeping me from entering the gates of heaven and so on, right? So and that's how we operate our business. That's our philosophy. It says it on our flyers and materials: investor first, investor first. We eat last.
Mhm.
And so taking that now and then doing this reset, and you mentioned LinkedIn, um, we have several activities that we do, and we don't. And I always ask our team, don't focus so much on what the results are going to be. The results will be the results, right? As long as you do the activity, all I care about is did we do the activity or not? And the activities include one webinar a month with a self-directed IRA custodian. Why do we do that? And that's been one of our biggest ones. There's $9 trillion in retirement accounts. And a lot of people, we did so much education on this. Now, not everybody invested with us, but people were like, wow, like I've been working in corporate for 30 years. Nobody's ever talked to me about a self-directed IRA. Like a lot of people just don't even know about this.
Yep.
Um, and so, we started doing that education. And what's really cool, and for people that are watching this, if you feel like you're just gonna start raising capital, a very quick way to get credibility is to put your logo next to a company that is a self-directed IRA. So if you start off with, Camel Plan or New View or any of the, Rocket Dollar is the one that we work with. If you start with any of these companies and you say, hey, we're doing a co-promoted webinar. And what I do is we have the IRA company speak first. They present for about 30 minutes about the do's and do nots and all the ins and outs of a self-directed IRA. And then I talk about our company, our team, projects that we've done. If you're listening and we don't have a relationship today and you don't know me and I don't know you, would love to get to know you better. You can come visit our projects here to start building that substantive relationship.
Mhm.
Otherwise, uh, if you are interested in a one-on-one private consultation, we always try to get them into a one-on-one private consultation because that's where I can really speed up the getting to know me, like me, trust me, so you'll invest with me,
Yep.
path. And so that's one, doing those on a regular basis, monthly basis. We do two, we do a brunch and learn. So a local restaurant will invite people out, and that's where, folks have their hair down and their, defenses down, and they're just listening to the presentation. And that's exactly what I did in my very, very first one that I just talked about when we raised money. So we still do those brunch and learns and investor dinner presentations to this day. So we do one dinner and one brunch every other week. And so there's a steady cadence of that going on in different parts of New Jersey. We'll find a really nice restaurant, invite people out. It's there's no obligations. You're just coming for an informational seminar. As a matter of fact, my dad gets mail here at my house, and it's like, the Fisher Investments and other companies inviting
Mhm.
him to steakhouses for the same stuff,
Yeah.
right? So we do those. As far
Nice.
as LinkedIn goes, um, I have about 11,000 connections on LinkedIn, right? So it's
Nice.
not the biggest account, not the smallest account either. And so what we'll do is we'll simply say we're excited to, we'll chat GPT it. Our company is excited to take on this new project where, we're looking forward to, and we'll just kind of list out everything.
Yep.
And if you've ever considered participating in new construction deals and you're an accredited investor, go ahead and direct message me. I'll send you the link to the deal room. And all the deal room is simply, a Google folder where you have the profit projection summary. We
Mhm.
have probably architectural plans and like a one-page deal summary sheet. Like, here's what we're purchasing it for. Here's how much we're going to do the reno for. Here's what we'll sell it for. These are all the things we're doing. This is the timeline, our target ROI, plus or minus. And we always give a range, not like an exact number. And if you're interested, let's do a one-on-one consultation and see if you're good for us and we're good for you. We never panhandle for money.
Yeah.
And when I do workshops on raising private capital, I always talk about this one, think of it as this scenario. I'm an employee. I get minimum wage at Best Buy. And Devin, you're my friend. You've been working in corporate America for some time. You're polished and all that. And I've got this amazing thing coming up on Black Friday, like a pre-Black Friday sale, where they're just giving employee discounts on this Samsung 100-inch television that sells at Best Buy for $4,000, but I'm getting it for 2,000 bucks.
Mm.
The problem is I get 15 bucks an hour, right? And I wasted on other stuff, so I don't have 2,000 bucks. And I have a limit of 10 TVs I can buy, Devin. So I'm gonna come to you and I say, Devin, let's buy all 10 TVs. I need 20K. Best Buy sells it for 4,000. You and I will sell it for 3,500 on Facebook
Mhm.
Marketplace. Okay. We'll make 1,500 a pop and we'll split it 50-50. This is an equity deal, right? I'm doing the sweat equity and you're providing the capital. And so you'll make 750 per, and so you'll get all your initial capital back when we sell all 10 TVs plus $7,500 in profit, and I'll make 7,500. In this scenario, you brought value to the table and I brought value to the table.
Yep.
I found the deal. I am a insider. I'm at Best Buy working, so you would not get these TVs without me, right? Even though I'm a lowly $15 employee making minimum wage or whatever, and you're the capital guy. You've got this really nice job. You've got money sitting in your prior 401k. You're going to invest with that. And so we broke Bar Valley. And a lot of people think when they raise capital, it's almost like they're panhandling or they're begging for money. And if that's the mindset and conviction that you're going out with, you're going to lose every single
Yeah,
time.
for sure.
The conviction has to be like, bro, I'm hooking you up.
Yeah.
Right. I'm hooking you up. I'm doing you a favor.
You got the opportunity.
And it's not from like a arrogant sort of. So it's like, let me bring you in on this deal. If you don't want it, that's fine. There's a line out the door that
Yeah.
I have, but you're one of my best buddies. So you're one of the first people I'm calling. But if you don't do it, I'm just gonna kind of move you to the side. And it's something that I learned from, guess what? MLM.
Mhm.
SW. Some will, some won't. So what next?
Mm.
Some will, some won't. So what next? And and almost like a robot, you turn off any emotions and you just go through the numbers.
Yeah.
Right? That being said, I make it very clear to the investors, you're very important to us. I'm going to treat you like my number one investor who's also my number one critic, my father.
Mm.
Right? Like brown dads are ruthless, right?
Sure.
And they just kind of tell it to you as it is. And so he's also my number one investor. My dad, like I told you, we came with nothing. He became a millionaire through real estate. When we had the turnkey company, we set him up with a bunch of properties. They all tripled. He got sick of landlording. He was managing them himself, sold them all, and then he just had stacks of cash from
Nice.
that while he was still doing his job at Bristol Myers Squibb as a scientist.
Oh,
Yeah.
that's awesome.
So now we've taken that money and invested it, with us, and he's good with that. But yeah, the LinkedIn strategy is simply that. It's putting out some teasers about the product. People see before and after pictures. You can say so much. And I noticed that when I get to the slide where I show a before and after picture, that whole HGTV thing kind of comes up and they're like, wow, that's what you do.
Yeah.
And they instantly see it, that there is a value appreciation that happens when you take the property through forced appreciation by renovations. And there's money to be made here. It clicks as soon as they see the before and after. And that's what we'll do. We'll put that up on LinkedIn. People will DM. Now you're a lead. You raised your hand. And now we're going to try to get you into a one-on-one private consultation and get an understanding of, are you accredited? Just do like the pre-KYC essentially.
Yep.
Have you invested in real estate before? And most of the time, I just have them talking. We don't even talk real estate as much. And what I've also come to know is you never judge a book by the cover. I just had a guy show up at an event and there were 6 people there and he was like kind of came in like a little bit disheveled and stuff, right? Um, Met him on Sunday. He's known me. I've known him for a while, but I didn't know like he had money like that. And he had bought properties in Austin, Texas. He's selling a few of them. Um, and he's like, yeah, I have 100K that's just sitting there. I'm happy to give that to you now. And then when I get out of these, I'll have like 1.2. And I want to put that in your fund. So let's do something there, but give me about 60 days for that. But how we connected is our daughters go to the same school.
Hmm.
And, you find those points of commonality, you go deeper into that. And then the sale part of, hey, do you want to invest is just basically a no-brainer at that point.
Yeah.
Because
Yeah.
and I think not, I wouldn't say I'm fully convicted at this point that there's really two things they're looking for. Is the deal good? Do the numbers work and make sense? Or number two, can I trust you to not lose my money? Like, yeah, making money is great, and I'm sure you'll do that. And what we do is we always say in our one-on-one private consultations is, "You're gonna make money with us. I'm not worried about that part." Right? Like, we almost make that as a foregone conclusion, and I
Yeah.
always say that statement, "You're gonna make money with us. I'm not worried about that part because we bought this property so dirt cheap, like, the only way to go is up with this one." But what I wanna really do is build a relationship with you and see how we're gonna send your kids to college through this,
Mhm.
how we're gonna do this, and without being a CFP, a certified financial planner, and so on and so forth, and you can obviously never put yourself forward as such. Um, what you are essentially doing is you're showing them another path outside of stocks and whatever else that they're used to, with somebody that they can trust in the community. And I'm like, and at the end, I always tell them, "Here's my personal cell phone number. WhatsApp me anytime you want," right? Because our investors are like family to us, and we do things like um, we'll do our investor of the year thing where we'll get, uh, we'll get a nice little Escalade, pick them up, and take them out to a nice restaurant, just them and their family, and then the car brings them back home, and it becomes. See, I can easily send a $500 Amazon gift card. It's not the same effect
Yeah.
as like this really nice evening with their family. They were picked up, wined and dined, and all that, and then they tell their friends about that, right?
Yeah. That's
And
great.
and so those type of things.
That's awesome, man. Wow. There's so much that I want to continue to talk about, but I want to make sure we honor your time, and maybe we can set up a part two because one, I even just am like, okay, well, I want to talk about your family and how do you leave this legacy and an understanding of what you're doing to your kids and helping to leave that lesson and that legacy, and then
Sure.
what you're even doing moving forward because your fund is mostly a single family real estate fund. That's where you operate mostly, or what?
No,
Right?
so
Or
single family stuff is where we do it with one capital partner,
yep.
joint ventures. The fund itself is targeting multifamily properties, but smaller apartment buildings, so 5 to 20 units. So that's what we're targeting here.
Nice, nice. Well, good, man. Well, as we kind of land the plane and kind of to be continued, what are this podcast is called Funds on Fire. And so what has you fired up about kind of where you're going, you and your fund and your business are going into this next season?
Yeah, so when we joined CG, it was kind of like a reset moment that I was talking about, because we had to relearn wholesaling 2.0 and acquisitions and dispo and all of that. And what I think capital raising does is it's just ultimate freedom. It really sets you up to then go out and acquire as many assets as you want, right? And then if, for those of you that want to leverage and cross collateralize against those assets, there's so many things that you could do from there. But it's if you had to focus on one singular skill set, I would say learn capital raising as much as
Yeah,
you can. Lock yourself
sure.
in a room, YouTube University it, learn from Devin, learn from other resources, Hunter Thompson and others that are out there. And nobody has a monopoly on all of the money. Nobody has a monopoly on all of the knowledge. So it's there for you if you want to go out and seek it and then just put in the work.
Yep. That's awesome, man. Well, I appreciate you. And I guess that was a good thing to leave everybody with because at the end of the day, I really do think if somebody were to ask me, you could go back, what would you tell your younger self? Or like, I think the greatest skill that you can have in business, all of business, because most at the end of the day, the highest level of business typically is a fund of some sort, right? Like you got private equity, real estate, hedge, all that stuff.
Yep.
Typically, like the pinnacle is some sort of fund, and all of that you need to leverage capital, being able to raise capital, being able to have capital partners, investor partnerships, all those things. So I think the best skill in all of business, not even necessarily sales. Sales is just a part of the skill, but it's the skill and the ability to raise capital. And I just think people just don't get there in order to experience that need and necessity. So you are so right, man. You are so right.
And I think a lot of people find it intimidating. They think it's
Yeah.
a thing for Wall Streeters. But if you have relationships and people trust you, right, and you have a track record, just get out there and just fast forward the thing. Nobody said you have to start off in wholesaling, then learn some rehabbing and follow that model, right?
Yeah.
You could go straight into capital raising and just buying assets and go straight to the end game, which is cash flow.
Yeah. Yeah. It's almost like the fast track. We think that we need to stair step. But I think, and you said something earlier about geometrical, and I don't even know what you quite mean by that, but like you have this geometric ability to grow at a geometric level from when you learn how to raise capital. And I think that's important.
Absolutely. Absolutely.
Yeah. Well, man, I appreciate you. I'm super thankful for you and your time. Where can people find you if they want to learn and they believe what you believe, like they have the same and share the same convictions as you, and they want to invest with you? Where should they go? Or if they want to learn from you, because I know you and your brother do a really cool thing on educating a lot of investors in this space.
Yeah, for sure. So our website is the REI, like real estate investing, the REI Bros, BROS, brothers.com. So you can go there if you're interested in any kind of, there's a lot of free resources there that you can download. I'm on Facebook, Shomail Malik. Or you can email me, Shomail@investwithapex.com. And I always get back to all the emails. And if you guys ever want to set up a one-on-one, I'm happy to do that as well.
Sweet. Well, man, I appreciate you and your time. Super thankful for you. I hope you have a great day, man. We're definitely going to do this again.
Yeah, absolutely. This was fun.
Wow. I hope you enjoyed that. I have a quick favor. If you've been enjoying the show, there's one simple way you can support us, and it's by hitting that follow button or that subscribe button on the app you're listening to. I want to level this podcast up in every single way possible, bringing you more value, incredible content and guests, and new strategies. Following the show and leaving a quick review goes a really long way in helping us to grow and continue to deliver top-tier content. It's the only free thing I'll ever ask you to do, and it makes a bigger impact than I can possibly put into words. So thank you for being a part of this journey, and I'll definitely catch you on the next episode. To great success and greater impact. Peace.